The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today's the day that we open the orange juice report from Clarence Beeks, because this is when the pedal hits the metal. We've got everything coming together, so we're going to see if we're going to be making a TOP in the old MARKET today or tomorrow, so we'll wait and see. We also got a email from our good friend Norm Winsky saying that he's looking for a top within a day or two. And we also got a really nice picture of the speed of the planets from our good friend Shane Smolian from wolftrader.net, who's also looking at this area. We're the only three people in the whole world, folks, with the Japanese gentleman, Mr. Abe, coming out today. That's what started the whole thing. Market was basically about unchanged to down a little bit, and then when the Japanese finance minister came out, the markets exploded. The Nikkei was up 4%, backing into that old resistance area, and that was followed by the Hang Seng up about 1.5%, and then China came out, but the China market was not up very much. It was only up 0.5% or so. We were up about 1% in the DAX and things like that. But there's some key things happening that I think really deserve our attention. The first one that I posted in here, as you can see, is that we are over this area of the Bradley that is very, very important. I've mentioned this many times. I wanted to show the speed chart that Shane Smolian shared with us last week. You'll notice here that here again we're also looking at an area where we should be heading down. Now that doesn't mean it's going to go down, because these are just probabilities, and when they fail, they fail badly. But this is set up extremely nice. Now we do have the same situation that they've been telling us all along, and that is that the market is making new highs and all these things. But if we look at the overall market, which we do all the time, you'll notice here that we are only making, in fact, we haven't even come up to it. We might hit it today, which is the 70, well, the Dow would have to be up over 300 points for it to hit it today, but the 78% retracement on the New York Stock Exchange Index from our May 19th high of last year comes in at 107.50, which is 150 points away. The Dow would have to be up over 400 points for that to be hit. So this is still telling us that there is, the market is not doing anywhere near what they're saying to us, because that's only, when you're looking at the Dow and the NASDAQ and the S&P, you're looking at basically 100 stocks. We've seen this over and over again. So we'll take a look at this. Now we want to look at this longer term chart that we get from our good friend Jim Bartolioni. You're going to see the same thing on the weekly basis of what it looks like. It still looks very similar to what we had in 2007 and 2008, but that remains to be seen if that's going to be the case. We'll wait and see. So, by the way, we're going to have a very special guest on at the break, Ed Dobson, who used to own Traders Press. He's probably responsible for more education for traders than anybody else in the history of our business. Will be on. We're going to be asking him some questions and just chatting. Been my friend for about 5 decades, I guess. And anyway, it'll be nice to have him on. I'm sure he's got some good stories to share with us. And also, we're going to ask him about which are the best books that he's found over the years to be helpful to traders. Okay, let's get to the key things as far as numbers that we're looking at. Mainly, let's watch this number here in the S&P 500 today, because we are making this same 5-point reversal. And if we close really strong this week. This means that this pattern has broken, and that tells us that this is all wrong, and we could be up all the way through Thanksgiving, which we could very easily do if it breaks to the upside. And the reason for that is because if you look at the shorter term, the shorter term cycle, looking at the ABCD. Let's try it again, Larry. The ABCD cycle, you'll see that we could easily, if we bust through there, we could easily go up another 5% without any trouble at all to complete that ABCD pattern. So you have to respect this market strength, but boy, we have a lot of timing stuff that is due this week that, it was actually due on the 5th, but the market actually has not gone anywhere. If you look at the New York Stock Exchange Index, it's only the Dow, those 40 or 50 stocks in the S&P, and then also the 20 stocks in the NASDAQ that is really doing all this stuff. Someone asked me the question about all the rhetoric that goes on about the Brexit thing, folks. I mean, everybody's got an opinion about it, and that's basically what markets run off of. And all I do is sort of look at the charts. That's basically, what I try to do is when I look at these things. All right, we got some other key numbers to look at that are very important. Let's take a look at the Treasury bond market. If you'll notice here, at this level of 177.06, we have hit that 5 times in the last 4 days. Within one tick, the high has been 177.11, and we're trading about one handle under that. But that has been the 1.618 level over the past 4 days. We've hit it 4 times. So I think that is really pretty strong resistance up in here. And if we take a look at the German Bund, which is the equivalent of our stock, of our 30-year bond, you'll notice here, and this is up to date, you'll notice here that the German Bund has not even taken out the highs of last week yet, which happened to be right at the 78.6 level. So there's a big divergence happening between the German Bund and the 30-year U.S. Treasury Bund. And I guess it's because, we're the only one that has positive interest rates, I suppose, but we'll wait and see. Now, if we go down to the shorter term paper and we look at the Treasury notes, all I'm going to do here is to show you the same type of divergence, but I'm going to go over the last 3.5 weeks and show you that there's really, this has been in a sideways motion, whereas we went parabolic in the 30-year Treasury bond. The 20-year notes have not done that. There's big divergence happening, folks. And not only that, but we're starting to see open interest decrease in the markets for the notes and bonds, which means investors are leaving the market, both longs and shorts. And when they're leaving the market, when the market goes up, that means it's short covering, and that usually sets the stage for a market that is ready to have a correction. Now, whether it does or not remains to be seen. We're going to take a break here to pay a few bills. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to shift gears here a little bit and look at the foreign currency, particularly the cross rate between the British pound and the U.S. dollar. There's going to be a mini Margaret Thatcher being elected, I guess, today, which is a good sign that they finally have someone coming in to help run the country. We'll wait and see what history says about this young lady, but the market is telling us from this chart, it comes from our good friend Jim Bartolioni from V50 Partners, but we went down to the 127 area. And then last night, I focused on the newsletter this week. I sent a special letter out on the British pound because it looks so interesting down in here at this 128.50 level. And then last night, the low was 128.49, and we've since rallied 150 pips, which is quite a bit. But if you'll notice from this chart here, looking at those little green boxes, which was the old support, that should be resistance, but that's 10 handles away from where we are here in the British pound. So the British pound has a potential to have a pretty good run here, and that's just a run in a bear market, you know, because if it gets back into that area of the 135 level, that should be some pretty interesting resistance, but that's neither here nor there. But the really big ones this week that we talked about last week happen to be in the oil market. And in fact, I hadn't seen this too often, where all of the indices in oil, gasoline, heating oil, and crude oil were all making perfect ABCD patterns. As you can see, the heating oil here, we hit a low last night of 139.50. We're already up $3 per barrel, or it's gallons, and it's $3 a gallon in the heating oil. So That's been a pretty big move. The crude oil went down to also a near perfect number at 144.70. We're now trading about $1 a barrel above that level. So these ABCD patterns are most probably finishing. Now, if we take out those lows that I just mentioned, and we'll use the crude oil as the fulcrum, I guess, or the one to watch the closest. I guess fulcrum's not the right word, but if we get below 44.70 now, then I would consider this a failed pattern, because moving $1 a barrel is quite a bit in the crude oil market. Gasoline futures, on the other hand, have been a little stronger this morning too, because it's also have completed a big ABCD pattern, but it also took out the April lows. In other words, gasoline was so low that it took out the April lows, but we could only make a 382 retracement in the crude oil and a 382 retracement in the heating oil. That's a sign of really good strength in heating oil and the crude oil. And we have very few people that are bullish the oil market now. They were certainly bullish at 51, but now at 45, they're not nearly as bullish. So this is what we're looking for, these ABCD patterns in a bull market. This is what Gartley mentioned, that this was the best time to buy, is when you have a nice ABCD pattern in a bull market. So those are the ones to keep an eye on today for yourself, because I think they do have some potential as long as we hold these lows, that we've made, so far. I wanted to share one other chart from our good friend Jim Bartolione that goes back into what we're looking at with the interest rates, and that is the utility index. And we've got a caller on the line, Brent from Martinez, California. Are you there, my friend?
I am, Larry. How are you today?
I'm here. What can I do for you, buddy?
Just had a quick question for you. If I have my numbers correct, I thought it was interesting that gold came within $1 of its high. The ES Mini came within $1 of its high. Do you have the same numbers? I have 12.
Yes.
1233 on the S&P, and then 2133 on the S&P, and then 1276.50 on gold.
1376.50. Yeah.
I'm sorry. Yeah.
No, that's okay. They're just a lot. The numbers. The first numbers don't make any difference anyway. Yeah, you're right. They're within $1. This is, I think, related to this all this cycle stuff that we have going on. But that's what it looks like anyway.
That just it seems very interesting. They got that close to their highs, but still haven't taken them out. So if you see them turn down from here, that's going to be fun to watch. We'll see what happens, I guess.
This is for sure.
All right. Have a great day, Larry.
Hey, listen. Yeah, thanks for calling in, Brent. I certainly appreciate it. How's your water situation? You get enough this year?
Oh, yeah. It was a great winter. It saved our bacon for sure. We have.
Good.
They were still getting snow. Just now, it's probably been about 3 weeks ago, but some late snow, which is great. So they've got snowpack that should get them through the entire summer. And my oldest brother, lives in Tahoe, and he was up in the back country just maybe a couple weeks ago, and the lakes were still frozen. So it's been a great winter, just exactly what we needed.
Oh, good. Well, listen,
right,
thanks for
take
calling
care,
in,
Larry.
my friend. I appreciate it.
You betcha. You have a great day. Huh?
Okay.
All right.
All right. You bet. Before we have Ed Dobson on, what I'm going to do here is take a look at the gold on a weekly basis, going back the last 3 or 4 years. The high that we made on Friday, and then again last night up at this 1377 level, that is a 38% retracement from the high in 2011. It's also a 1.618 expansion of the last high that we made back at 1306 before we came down to 1202 and then had the big rally up. So there's some, and that makes it a 1, 2, 3, 4, 5 expanding triangle at that spot also. If we take a look, since we're talking about numbers, and this is what we talk about here, if we look at the silver going over on a weekly chart over the last several years, you'll notice that, and silver is wild, folks, let me tell you. I mean, it wasn't too bad last night. We made a 78% retracement of the high on Friday last night, but the area of 20.75 per ounce in silver was a 61% retracement of the high from 2013, and it was also a 38% retracement from the high of 2011. And that was spot on at 21.30 per ounce. So we're probably ready for a pretty good correction here in both gold and silver. This is the way it looks like from the longer term weekly charts. We're seeing the same thing in several of the stocks like American Barrick and also Newmont Mining, and also in the XAU and the HUI, which is the Bull Bear index for gold. So that's what I'm assuming. But any move above 1380 in gold or 2140 in silver would certainly negate all of this. But the real key to me is what's going to happen in stocks and also in bonds this week, because we are at these really critical levels with all these cycles coming together. The only way this market's going to go up, folks, is if the Bradley fails and these speed indexes that Shane has forwarded to us fail. They fail, of course, but probabilities say the odds are on our side. 877-927-6648. Stay tuned for Ed Dobson.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I believe we have Ed Dobson on the line. Ed, are you there?
Good morning.
Good morning to you. A lot of you folks don't remember who he is, but he ran Traders Press for many, many years and was responsible for educating a whole lot of people, including this old cowboy. How you doing, Ed?
Hey, I'm doing great, Larry. Great to hear from you.
Yeah, it's good to hear from you. We used to talk 2 or 3 times a week, and now it's every several months. Ed, what are you doing with yourself now? Are you trading full time again?
Larry, I'm retired now, but I'm trading pretty actively. But I'm trying to do strategies that let me get out and about once or twice a day.
Oh, that's for sure a good thing.
I'm primarily trading in options on the SPX and the Russell.
Okay, that's good. The first question that we had from one of our listeners is, what were the best books over the years that you found, Ed? And you had warehouses full of this stuff. And Mike, first, let me ask a personal question. Did you keep a lot of these books yourself, your favorite ones?
I did. Yeah, I've got
Okay.
a library, probably 400 or 500 different books.
Okay, what are your favorites of those books that you think that someone starting out new would be interested in learning about it?
Well, that's sort of a hard question because there's so many different aspects to trading, Larry. You know, you've got psychology, systems, options, futures, stocks. But, you know, I was always had a proclivity for books on technical analysis. I love the books by John Murphy. Of course, I published several of the books that you did. I always loved those. Some of the books that I never read, but I thought I was most proud of publishing, were the books by J.M. Hurst. And another book that I published called Technically Speaking by Chris Wilkinson, which interviews 16 top technical analysts. It's a very little-known book, but it was given an award by the MTA back in its day.
Well,
Bill O'Neill. Sorry, go ahead.
The main thing, did you ever have any influence with of W.D. Gann? I mean, we've heard many things about him over the years, and I know you've researched some of these folks like Hurst and other folks. Did you have any experience with W.D. Gann?
Larry, I never knew W.D. Gann. You know, he died way back about when I was 10 years old in 1955, if I'm not mistaken.
Yes.
And I never really did much research on his material. I never published much of it, and I never really did go into it too deeply.
I see.
I was a lot more involved in the work of Hurst.
Yes, I remember you were looking for Hurst at one time. I remember, and he used to be my customer when I was at Drexel Burnham Lambert. I had him he did one trade in 4 years.
Wow.
And that was long gold, and he made some money in that, but he didn't trade very much. He loved to fish. That's how I remember him. Quite a very nice fellow, but he lived up in the last part of his years. He lived up in Nevada City, Grass Valley area, and he fished up in those trout streams all the time. But you published his Cyclotech stuff that was, I thought, very good for cycle beginnings, you know, of learning cycle stuff, and that's always been. All this stuff is no longer available. Is that correct? In other words, you have to search.
As far as I know, it's out of print, Larry. His original book, The Profit Magic of Stock Transaction Timing, had originally been published by Prentice Hall back in the early 1970s. And by reprint agreement, I reprinted that book and had it in print at Traders Press. And I don't believe that book is still in print. There's used copies probably available on Amazon. And then I published his full-fledged cycles course, which he did back in the early 70s. And that had been out of print for many years. And it's no longer available since Traders Press is no longer around.
Yeah, you were one of the Ed sold Traders Press to Russell Wassendorf of PFG about 2 years before they went under, Ed. Was that about right?
In December of 2009.
Oh, wow.
Yeah,
So
they went under in July of 2012 when the news hit on that.
Yeah, boy, you
3
were
years later.
well, you were trying to retire at the time. I remember we used to chat about it, and finally you were able to do that. So you certainly enjoy your time now, which is really great. Okay, now I'm gonna. You remember the book, The Reminiscences of a Stock Operator? You always liked
Of
that
course.
book. You still feel
Oh,
strongly
yeah, of
about?
course. Absolutely. It's one of my favorites. It originally was published in 1923, and as you know, it's a fictionalized biography of Jesse Livermore,
Mm-hmm.
written
And the
by
sec-
Edwin Lefevre, who was a columnist for Barron's way back then.
Okay, now, do you remember you also published a book by one of Livermore's friends, Richard Smitten? Was that his name, out of Florida?
It was.
Now
He was not personally acquainted with Livermore, but he was a great fan of Livermore, and he did a tremendous amount of research on him. And he wrote a biography of Livermore called The Amazing Life of Jesse Livermore, which I published. And then he went on to write several other books on Livermore. And as a matter of fact, he developed software which was institutionally used to trade a la Livermore.
Really?
And unfortunately, right in the middle of his work, he was on vacation down in the Caribbean, had a sunstroke on one of the beaches down there, and passed away. That was probably 10 years ago.
Wow. And he was around our age too, wasn't he?
He was.
Yeah, that's what I thought, for heaven's sakes. Wow. Okay, now we have one other question from one of our new listeners, and they said they're just starting out. What would be the first 2 or 3 books that you would pick if you wanted to learn, technical analysis in the markets? And this is coming from someone who's had a library of thousands of books. So, Ed, why don't you? I hate to put you on the spot, but I'm good at that. So, why don't you just tell us what you think might be the best books on technical analysis to get started?
Well, I would read the book by John Murphy called Technical Analysis of the Financial Markets. Mm-hmm. One of my old favorites, which is actually a bit simpler and it's a little more simplistic, you might start with a book by Bill Giler called, I'm trying to remember the name of it, but it's the only book that he wrote. But it's a book on interpreting bar charts. Mm-hmm. Excellent book. And I would also read the books by Bill Giler, How to Make Money in Stocks. Mm-hmm. Good all-around approach to trading and a technical analysis, and I always recommended that one.
Okay, that's great. That's really good. Any particular stories that you'd like to tell us about, some of the unusual things that happened to you over the years? We used to go to all of the conventions at the money shows twice a year, and that we did that for like 10 or 12 years in a row, which was always a lot of fun. But you've got to have some fun stories of people you met. Who's the most unusual person you met, do you think, in all these years of publishing books, Ed? Do you have one particular? I hope he's deceased, if nothing else.
I don't know if I could pick one person out. I was honored to meet many of the famous people in the industry that did book signings at my booth, and I got to know a lot of them over the years. Sure. I first started out, Tim Slater, who was one of the first people who ever developed technical analysis software, asked me to start doing his
stay with it.
In 1983.
Ed, stay with us again, and we'll pick up with Tim Slater in just a minute, okay?
Sure.
You bet.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com
FDIC.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back and we're talking with Ed Dobson from the old formerly Traders Press. Ed, I remember you were just talking about Tim Slater. As a matter of fact, Paula Douglas, Mark's wife, just spoke with Tim this past week. He's down in New Orleans. He's retired, but you were mentioning he's the one that really got started with giving us these computers with all the charts and stuff on us. That was with CompuTrack, wasn't it?
It was.
Yeah.
Tim. He was one of the co-founders of CompuTrack along with Walt Brussert and two others. I don't recall their names. But Tim had me start going to his CompuTrack seminars beginning back in 1983 in San Francisco. And that's when I started doing the trade shows where we eventually met, and, which I did for over 25 years.
Yeah.
And I met a lot of the people in the industry there through those trade shows. And I remember that first year, I remember meeting John Murphy, and quite a few of the other names. Bob Prechter was there that year. So that was the beginning, really, of when I got out into the mainstream of the trade shows and got to know a lot of the people in the industry.
Yeah, you were a broker at one time when I first met you 40 years ago, weren't you?
I was. I started out, Larry, as a broker when I got out of the Army in 1970. I was a broker with Kipnis Commodities up in New York City for 4 years. And then I came back to South Carolina, my home state, and I was with Smith Barney and then with Payne Weber. And,
I met you.
And I was with them until 1992 when I left them to run Traders Press full time. I had started Traders Press back in 1975 and left the brokerage business to run it full time starting in 1992.
Wow, boy, the time really goes by. Well, listen, buddy, I'm going to let you go, and I want to thank you for coming on. It's always a pleasure talking to you and giving us the information that you have. And I wanted to thank you from the bottom of my heart, from all the traders in the world that have benefited from you delivering the books at a fair price, too. You never gouged anybody, and on some of that stuff you certainly could have, but you always did a fair job with everybody. So you should be very proud of yourself, Ed.
Well, it was always a great pleasure doing what I did. I loved my work, and I loved working with other traders and trying to help them to educate themselves.
All right. I want to wish you the best of luck, partner, and I hope we get to meet again one of these days.
Okay, amigo. Great to hear from you. Take care.
Good to hear. You bet, Ed. Bye-bye. That was Ed Dobson from Traders Press, formerly of Traders Press, of course, and we're a true gentleman in the business. Let's get back to the markets here. We are within a few pennies of making an all-time high in the S&P Cash Index. That number is 213.78. We're trading at 213.61 right now, so we'll most probably take that out. It's going to be very interesting because that's also a 1, 2, 3, 4, 5 expanding triangle pattern, and it's coming in at a time where the cycle should be very, very close. Watch the number of 2134 to 2138 in the S&P futures. That's the number that we're looking at today from a trading standpoint, that we should hit that, and most probably it'll be around 10:30 in the morning. If you'll remember, Shane Smolian last week had 3 days where the market bottomed or topped within 15 minutes of that 10:30 time frame. So watch that, because this is amateur hour that we're in now with all the buying coming in, and much of this was caused, of course, with the Japanese finance minister saying that they were going to do everything to keep the stock market up. And remember, the Japanese stock market is 60% controlled by the government now, so they have a real interest in doing that. So these are some of the things that we want to keep interesting as we watch, as we go through some of these things. Okay, now someone's asked a question about the crude oil. What I would do is, if you bought the crude oil down at that 45 level that we were talking about, it's moved about 70 pips above it. You know, I think putting your stop at 44.90 or something like that, only risking about $100, or even just putting it at break even, that'd be another thing to do. And that would be the same thing I would be doing on the British pound if you did both of those, to see if that's going to be a good place to see if these markets are going to hold from these levels. Remember, folks, these are just numbers. Everything we talk about here is numbers, are not related to, you know, economic things of supply, demand, or anything like that. These are just patterns and Fibonacci numbers. Sometimes they fail, sometimes they work. They work more than they fail, which is good, but we want to pay close attention to the amount of risk that we have. So anything above 2138 in the S&P would tell us that this is probably all wrong, and we're probably going to go a lot higher. So 2138 would be the line in the sand that I would be looking at today in the S&P futures. The cash has not quite made new highs yet. We're within a heartbeat of doing it, but I've got my beeper on so that when the little hands on the wall tell us we get above there, I want to see how the market reacts. We are not even making a 78% retracement in the New York Stock Exchange Index, which is the real market, folks. So just remember that the Dow Jones and the S&P and the NASDAQ are 100 stocks, and we're talking about 8,000 stocks. So be very, very careful of how you determine whether this market is making new highs, because that is in fact not what is happening. You know, and if we get above 10,800 in the New York Stock Exchange Index, then then something is really wrong, and we're most probably getting ready to move to a much higher level. The problem is we're setting over this planetary index, we're setting over this Bradley model, and we're setting over this transit charts that's saying something really big is happening, and we're starting to see, really good volatility. I mean, just today, between what happened in July 8th in gold and where we are today, today's low that we made in gold just a little while ago at 1351 was a perfect 61% retracement off of that low to the exact tick. So if we get below 1350, that would tell us that gold has started to turn to the downside. So these are the things that we're keeping an eye on so far today, which will be interesting because it's always interesting. A lot of different patterns. Let's switch over to the grain markets. We had a really nice pattern from Norm Winsky in soybeans. Was also lined up with our ABCD pattern that we look at in the beans, and we also had a really nice level in corn and also in wheat, where we came down and made ABCD patterns in the beans. We made 1.27 expansions in corn, and we made a 1.27 expansion in the wheat, and then we've had, a rally off of those levels. Now, should the soybeans get below November beans, which is the new crop bean, if they get below 10.20 a bushel, that'll tell us that this market has certainly failed, and we're probably heading down, to new lows. It's amazing that this little wasn't little, it was $3 a bushel move in soybeans due to the weather was able to put the market in a really strong position. So we'll see how we're going to be doing. We're going to take a little break here, I believe. We got a caller in from New Jersey. Mike, are you there?
Hi, Larry. Can you hear me?
I can hear you, but if we have a... this is Thailand, Mike. How are you?
Of course.
I recognize your voice. Yeah. Hey, listen, we're going to have to take a break here.
All right.
Right now. Stay with us, okay? Stay with us, Mike.
All right.
Yeah.
Yep,
Bye-bye.
Thank you, Larry.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Mike from New Jersey. Mike, you were asking a question about the S&Ps?
Yeah, hi, Larry. I thought we already just carved out a new all-time high not too long after the open.
No, we missed it by, from what I look at, Mike, we missed it by 10 cents. The old low was
That's hard. I hate to interrupt you and everything, but that's hard for me to believe. I can't believe I would be. I hope I'm wrong, but anyway, the way I'm showing it, Larry, is the all-time high in the S&P is well, what? Darn it. I'm all confused here. Sorry. Sorry
That's
about
okay.
that.
It's not a problem.
But I'm trying to bring up my numbers, but I was thinking about this. I could barely sleep last weekend because I'm saying to myself, this market, it missed it by $2.99 to 2.99 points. Okay, on Friday, and it did it at 2:56 p.m. Do you see? Now, am I wrong about that? Can you double check as we speak, or
yes,
am I
I'm looking at it, and I've double checked it because I've had 3 or 4 people ask me about it over the weekend. But the old high we made on May 19th was 213.78, and so far today we've been at 213.67. So we've missed it by 12 cents.
Wow, you're talking about the cash S&P. I know I don't sound brilliant here, Larry, but I'm stunned that I can't be, because if that's the case, then I think we've topped. This is done. You know what I mean? Because I just don't think it's going to take that out. Do you see?
Well, that
I know I sound really confused and everything, but.
Well, I'm confused, but never in doubt. Anyway, I think it's correct. But you're talking about little tiny differences, I think. But we'll see. Hey, we got to leave now, Mike. Thanks for calling in, my friend.
Thank you, Larry. Sorry to be a.
No, love to have you. Bye-bye.
Bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.